Hello and good evening. Welcome to the review of the trade on US100 as posted on my Instagram and WhatsApp groups. I mentioned that I will be reviewing the trade that I took on Wednesday. I took US100 longs, so I promised a review of the trade. So here we go. So my analysis starts at midnight, the midnight open. So uh, this trade review is done on a 5-minute chart, and I will not be going down to any lower time frames because I want to keep it as short as possible. Okay, so Wednesday opened, the midnight open, it traded higher, formed this London session high that I'm pointing at right here, which was at around 4:05 4 a.m. New York time. Any time frames that I mention, any times that I mention here are in New York time. That is the time setting that we use. So price opened, traded higher, formed this high at 4, and then it came back and traded lower, cleared all the lows, and formed a very important high at 650 stroke 645. So between that time frame, between 640 to 650, it's when we formed a London session low. And going into 830, those are two things that I usually take note of: the London session high and the London session low, and or the intermediate high and intermediate low pre 830. So looking at that, we can see that during the London kill zone, we formed the high, and then some minutes to 7, we formed this low. We also did the same on US 500. You can notice that it formed its high at around the same time, 4 a.m., and it formed the same lows at 6:45 a.m. So you will notice a lot that I tend to compare the two. That is something that we call inter-market analysis. That is where you you analyze two markets that are closely correlated to each other to have more confluence, more bias. It confirms a lot in terms of your entries, your bias, and narrative. So let's get back to it. When the 830 opened, we didn't have any news drivers on that day. If I'm right, let me just check. I don't think we had any news drivers on Wednesday. Wednesday Wednesday was the 6th of August 2025. Yes, we did not have any high impact or medium impact news. So it was I anticipated a very clean day in terms of price action. So I always wait for the 9:30 equities open because we tend to have a lot of volatility during the open. So we can see that on the 9:30 opened, after the 9:30 open, something very crucial happened. We saw what we call our change in structure. So I'll just draw that out right now. I'll move that so that we can have our change. We can draw it out. That is change in structure, and change in structure, a bullish change in structure. At the same time, we also need to check what US 500 has done because that is on US 100. We've had that CISD, right? We have that change in state of delivery. So I will go to US 500 and see what it has done in relation to the London session high. So you will notice that US 500, on the other hand, instead of forming the bullish change in state of delivery, what we did, we took out the London session lows at 9:30. After the 9:30, actually it was at 9:30. Okay, so let me just draw it out. So on US 100, this London session low was respected in relation to the 9:30 low. So that is what we call an SMT divergent. Smart money, divergent smart money tool, but it all means the same. So uh, that shows that the market is willing to trade higher, because on on one of the correlated pairs, let me just mark it out, because on one of the correlated pairs, it has maintained the low of the day, which formed at 6:45. But on the other, which is more volatile, that is the stronger pair in terms of volatility, okay, we swept the low that formed at 6:45, right? So when you have such a thing where on correlated pairs, one pair takes the low and the other doesn't, or one pair takes the high and the other doesn't, it forms a failed swing. We call that an SMT divergence. An SMT divergence can be used to show the willingness of the market makers to trade higher or lower. Sorry for that. So in our case, on Wednesday, it showed a willingness of the market makers to trade higher. All right. So what did I do? Um, I marked this change in state of delivery on the weaker pair in terms of volatility, but then it is the stronger pair in terms of bullishness or trading higher. And that is what we want to do. So we trade on the pair that forms a failed swing high or failed swing low. In short, the one that is shows lesser volatility. Okay, so I had two confluences by now. I had this SMT with the SP500, and then I had this change in state of delivery that formed on a 5-minute chart. All right, so after a change in state of delivery, what do? I wait for price to trade back into the swept into the candle that forms the change in state of delivery. I wait for price to retrace. When it retraces, that is where my entry was. So we can see that it traded higher uh, up to 10:05, and then at 10:10 we started the retracement back into the change in state, and that is what I want to see, because that is my entry. As my bias was already cemented, I took my longs here, yes, and then I placed my stop loss at the London session low, which has now become, which I was now confident that it will be the low of the day if we were to trade higher. So my first take profits were to be taken off at the previous day high, because if you look backwards, you can see that we had very nice swing, very nice old highs right here. So that is a good point to take off your your profits. All right. So some people might ask, why did I take the long in terms of higher time frame bias or analysis? So if you remember very well, on Monday I posted a review and mentioned that if price closes below the mean threshold of Friday's candle, I will be bearish this week, and if price closes above mean threshold Friday's candle, I will be bullish. So that statement alone shows that I expected bullish prices this week on both the US 100 and the US 500. That was on Monday. Coming into Tuesday, I posted two screenshots on my groups which highlighted this 4-hour fair value gap on a 4-hour chart. The 4-hour fair value gap had been respected. Additionally, the 4-hour fair value gap also formed an SMT divergence with the S&P, which we'll talk about that some other time. So you can see that coming in on Monday, my bias was bullish, and then the PDRS on a higher time frame, on a 4-hour time frame that I wanted to be respected, had been respected on Tuesday. So on Wednesday, I was confident, super confident, that we needed to, not that we needed, we could trade higher on Friday. And if I saw the signs, I will take the longs. And I saw the signs. I saw this change in state of delivery. I saw this SMT divergence. And I took the longs. So that is how I caught around let's see, I caught around 180, and I made around $1,300 on that trade. I'll just show you right here. Okay, these are Audi JPY longs that are running, so ignore that. This is the trade that I want you to see. This one right here. You can see that close short position for symbol XAUUSD. No, I'm sorry, it's not the one. This is the one that I'm highlighting right now. 10 units, US100 at price 23,294. So I closed the trade at 23,294, which was relatively above the previous day high. Yes, perfect. I think that was 10 units. Yes, 10 units. So yes, I guess that is all for today. See you on the next video. If you're wondering where I talked about the weekly preview, you can watch the previous video posted on my YouTube. It's tagged with the 4th August date, so you'll just see it. It's named weekly preview US100 and SP500. So yeah, catch you next time. See you on the next video. Thank you.